All right, for more on Colombia's bond market, we're joined by Mark Grant, Managing Director at Southwest Securities. Mark, good to have you on the show. Thanks for joining us. Mark, let's get straight into this.
Good to see you,
Why are
Michelle.
we seeing... Good to see you, Mark. Nice weather there in Florida. Not so much here in New York, but let's get into the real exciting, electrifying, stormy times, and that's the Colombian bond market. They're enjoying really smooth weather lately. Why are we having such an interest in the Colombian bond market lately?
Well, the economy is relatively stable and has been for a number of years. Their inflation rate is down, but the central bank has been going against what all the other central banks in the world, except perhaps Japan has done by allowing rates to rise. So if you can borrow money in the United States or borrow money in Europe and then turn around and buy the Colombian bonds, you're making a carry trade or an arbitrage that's been quite profitable.
Right. All right, Mark, you've just gotten into the gist of the matter. A big part of the appeal is the carry trade. Can you simplify that for us a little bit? Explain how that works in a little bit more detail and why fixed income investors try to exploit the differential in interest rates between two countries?
Well, the carry trade it's more complicated than that, but you can either borrow money cheaply to invest in other assets, and then it gets into the maturity of the duration of the assets. It also has to do with the currency that you're borrowing in. The biggest carry trade on earth right now, Michelle, is what's going on in Europe, where the European banks are able to borrow money at 0.15% from the European Central Bank, and then of course they're encouraged, is one word, to buy European sovereign debt, which has pushed the yields down in Europe just incredibly.
Right, before we get into the negative rates at the ECB, I just want to focus how all the interest in the Colombian bond market has now pushed the Colombian peso to a 13-month high. So what's the significance of this? And is a strong peso now in the best interest of the Colombian economy?
Well, what's happened is, as you point out, the carry trade has taken place. People have, as I said, borrowed money in Europe or the United States to buy the Colombian bonds. It's a stable country, even though they've had some political issues. The economy is certainly stable. And the big fear, of course, at some point is you begin to ratchet up inflation with this. And that's the other side of the carry trade in Colombia's situation.
So how does Colombia's bond market compare with other Latin American countries?
The two most stable of the Latin American countries are Colombia and Chile. Then you have a lot of volatility in places like Brazil. And then, of course, you have Argentina, which is about a hair's breadth away from going bankrupt again. So on a comparative basis, as I said, Chile and Colombia look like the most two stable countries to invest in.
But you mentioned Argentina, and they've been locked out of the bond market for over 10 years now. Does that create more or less confidence in a country like Colombia? Or do investors not relate the two at all?
Well, they relate them in terms of that they're both Latin American countries. But Argentina is about to default again in all likelihood because of U.S. laws, and that's going to throw all kinds of issues into the banking system in all of Latin America.
Now, with all of these high interest rates in Latin America, we've got the ECB with negative rates, as you mentioned, and the U.S. Fed rate at near zero. So what does that do for the U.S. bond market and the European bond market?
Well, right now, the spread between the European or the German 10-year and the American 10-year is the highest it's been in more than 15 years. I think if you want to talk about a carry trade, there's a very good carry trade by buying the long 30-year American treasuries or even the 10-year treasuries and waiting for them to equate to the European sovereign market And if you can borrow the money at very cheap rates in Europe, that's where the carry trade comes in.
All right, so plenty of opportunities there. We're going to have to leave it right there, though, for now. Thank you so much, Mark.